Yeah, somebody else asked me in a private message, to what extent is raising capital the ultimate goal? Is it the wrong way to think about it? If you're a new startup, could the alternative goal be client acquisition, or is there something else that I might not be thinking of?
It's an awesome question. I think Sanjay and I are chuckling because I think one of the things that we're really focused on, especially in my cohort, because I used to be a founder and I had to deal with a lot of this, and I wasn't in the Bay at the time, and so a lot of this stuff I had to learn on my own, and I didn't have the luxury of having all of these wonderful resources that are here. And what I've come to realize, and then also going back to that 92% failure rate, something that I'm really passionate about is not the next round of fundraising. So if that's what you're looking for, my accelerator might not be the best, or at least my specific cohort. But I'm really looking towards, I want to create sustainable businesses where their goal is to not shut their doors. Because this at very early stages. So like for pre-seed, seed stages, often the body of work you need to do to raise money versus the body of work you need to do to build are often in direct conflict with each other at the pre-seed stage. And so there's a very fine line between needing to raise, but also waiting to raise so that you've built enough so that you're at a good place where you can negotiate well, negotiate a great valuation, and be able to raise money in a way that is best suited for the growth of your company.
Got it. Um, People have talked about consumer versus B2B. Is that a distinction that's important in any of your programs, or do cohorts have some of each? And yeah, can you elaborate on that?
Yeah, yeah, I can. Sorry, Natalie, do you want to go first?
Go for it. Go for it, Sanjay.
Yeah, I would say we accept B2C and B2B companies for sure. We're industry agnostic. I think the way I think about it is the way we evaluate the companies is going to be different. Even within B2B, there's going to be a lot like an enterprise application is going to be very different than like a dev tool or or a cybersecurity company. So I think the way we think about it is just like like we would just evaluate the companies different. You know, if you're a consumer company versus a deep tech company, our KPIs and our metrics are just going to be a little bit different. So that's the main thing I was going to say. You know.
It's the same with us as well.
Yeah, I say like we're pretty much agnostic. It doesn't make a difference. I will say one of the things we are even communicating to B2B founders these days is the importance of social media. In our cohort, we kind of communicated that, and a lot of people ended up starting their social media from some of the information we're sharing. We're actually also sharing some tooling that's going to help with that. And so some of our members started getting invited to speak on panels because of this action that happened through our cohort. And so that was I think something that's new on the B2B side, where on the B2C side, you're going to have to interface with people, but on the B2B, it's happening more and more now. Yeah.
Makes sense.
Um,
Um, oh, go ahead.
at Draper University, we cover both like B2C and B2B, but yeah, we definitely trying to put all together, connecting both aspect, like and then learning each other, because B2B could be a great way to make a revenue, but some people like B2C people are like really good at the marketing. So we cover both aspect, and then we support yeah, any type of the businesses usually.
Yeah. Um, let's say that your startup is in an industry, and there might exist an accelerator that's focused specifically on helping startups in that industry. Is that the right bet, or how do you make that decision? Is it still perhaps better to go for a more general startup accelerator program or pre-accelerator program, even if one exists that is tailored specifically to startups in your industry?
I think it's dependent on like what are you looking to get out of the accelerator. Obviously, if you go with the industry specific, you're going to get stuff that are specific to the industry, but maybe the general one is covering other things that the specific one isn't covering. So I know a lot of founders who've participated in multiple accelerators just because you're getting access to different networks, different information, and different resources. So yeah, you just need to know what you want when you're going into the accelerator.
Um, I would say, I think I would say, and this is focused predominantly on pre-seed startups. I would say agnostic is a better route to go. So I've led a space, blockchain, cannabis and healthcare, biotech focused verticals, as well as a generalist vertical. And what I found is startups need basic structure and before they necessarily need more specific information. And at the end of the day, if that basic structure isn't there, no matter how much you try to grow off of a broken foundation, then there's a lot of friction points in the future that I find that startups end up having to redo, undo, go back to the beginning and start again. A lot of times with early stage startups, it kind of sucks. And I found this out as a founder, is that for certain things, there's a specific way to do things and there's a specific order in which to do things. And some of that order is really important. So kind of think of it like, I don't know, building furniture. You can't build certain things first if they don't attach properly with the other portions. And so this is really similar in that regard. And so for pre-seed, I would opt for general. And then as you grow into seed and beyond that to go more specific, with that said, having advisors that are specific in your space early on is also very beneficial.
Good answer. No one want to add to that? Can you talk a little bit about terms? So what kind of equity is taken? Do you invest? What do the startups sort of give and get?
Yeah, we don't take any equity in ours, so we do take a program fee. At the moment, we actually have a special going on, so it's actually only $647 for our cohort if you apply. And I mean, what you get is pretty much network, and then we do have all the pitches with the judges. So I know, like in our last cohort, one of our members ended up getting a 2 million partnership deal with our judges, and I think another one ended up fundraising. So yeah, but there's no guarantee. Yeah.
Got it.
And then we invest 200K on a cap safe for I think 7.5% to 2.67 million valuation cap into every company that's accepted into the accelerator. And we give that capital upfront.
So at Draper U, we don't take any program fee, but you have to be selected though. But if you're selected, we're gonna cover all the accommodation, so you don't need to worry about. So you're flying here, and then we sometimes, depending on the program, we sometimes put in the grant money upfront. So some program like we bring a 20K or sometime 30K upfront. And then also if someone is selected among the cohort, and then we sometimes put the investment. So the terms will be really depending on the companies, but so people sometimes expecting to come here to get invested by us, or we also support them to get invested by other VCs. So that is something that we usually discuss. Yeah.
We have a program fee. It's 800 is an early registrant, and then it's 1,000 regular. We do offer partial scholarships, and then we don't take equity. We do take a 2.2% stock option warrant. In addition to that, what we do offer is upon graduation, there's a free 2.5 month program. It's called Funding Lab. And so that is an intense program that pretty much, when you hit the ground running, will show you how to fundraise. What are the ins and outs? What do you do operationally? Newsletter, data room, introductions, cold, warm intros, getting you in front of investors, all of that stuff after graduation.
Oh, the other thing I also want to share, we're starting like a docu-series with our pre-accelerator. So if you come to the retreat, we're going to capture, your story, the before, your intentions, and how you are at the end, demo day, pitches, and at the end. So you'll also have some video footage you can walk away from, whether you want to use it for your own personal capture of your journey or marketing material, or to apply to other accelerators or whatnot. Yeah, and then we're hoping with that over time, it'll just be more marketing for your, if we get more and more exposure through that, for your brand as well.
Cool. So I've bookmarked where I've gotten to on the questions that came in on the chat, and I'll return to those. But just to kind of mix things up, did anybody want to unmute and just ask their question directly? You can raise your hand and I'll call on you, just so we're not all hearing my voice too much. No worries. And while you think about that, I can continue here. Here's an interesting one. What is the average number of pre-accelerator programs that startups go through? I would say just one from my experience, although I'm starting to see, like, I don't know, an increase in, I wouldn't call them accelerator programs, but like workshop kind of things that are getting popular. A lot of that has to do with like AI or vibe coding or, but yeah, I don't know if anyone else has another answer to that. Yeah.
I don't know about exact numbers, but I just know a lot of like cohort members have participated in the other programs, whether they're pre-accelerators or accelerators as well. And so I feel like usually at the beginning, you're just learning a lot. And so these programs are super useful. I know one of my friends, she went through a bunch of accelerators and now she's like, okay, when I build, I don't need to go into accelerators anymore because I've, learned the gamut. I've learned all the basics. So at the beginning, I think, hey, if you have the opportunity, you can take it. Yeah.
Yeah, it makes sense. Hassan, thanks for raising a hand. Did you want to ask a question?
Sure. So my question is, if a company has a small business innovation research grant from the National Science Foundation, phase 1 is 300,000 and phase 2 is 2 million, what kind of accelerator would they fit in?
Well, I can talk to that a little bit. There are organizations that focus purely on that, like helping you to get more and more of those government grants and get kind of deeper into, government stuff. Some of them are focused more on DoD, and some of them are focused more, I think like Long Ventures is an example. One of the startups I worked on, worked with them. And then some of them are more like NIH kind of stuff. So there's like a whole slew of groups that help with that. And there's somewhere in between like a program, like sort of pre-accelerator, accelerator, like the ones on this panel, on the one hand, and a like business development strategy, consulting group that you hire that, tries to find the right sort of solicitations for you or, opportunities for you, and maybe has connections within the government, having done that sort of thing in the past.
And then I also know like
Panelists.
DARPA has released a couple of like accelerators as well that might be like of good fit for what you're doing. Mm-hmm.
Great, thank you.
Nice. And then David, thanks for volunteering to ask a question right out here.
Sure. I'm wondering if any of the panelists could share your perspective on when, for a startup that's looking to grow, when it makes sense to pursue this line of funding that we all seem to be enamored with, venture capital or angel funding, investor funding, versus the much more traditional but less sexy, get a small business loan or whatever loans we're able to qualify for that are on terms that aren't egregious, and utilize that as opposed. I mean, I know that for for working capital, that's one thing, but using loan funding for growth.
Yeah, I think that's really dependent on, your goals, your big picture, what your scenario is, what your product is. Like there's a lot of factors to like consider on what method of funding is better for you. So that's why we do cover like a lot of like having speakers to speak to each of them and when are they good for. But it's very context specific to your scenario. Yeah.
Yeah, I think a lot of it will come down to exactly what Natalie said. It'll come down to like what your business is like, when you expect to start making cash and revenue, like how much ownership would you like to have, ownership and control. Um, you know, uh, what is the size of the market you're trying to go after is. Um, Yes, those are some of the major things I would think about when deciding whether to go through like a SBA loan versus venture capital.
Thank you.
Cool. Some questions about sustainability, recycling, or agriculture. Is that a focus, or is there anything in particular about that in any of your programs? Sounds like
We
not specific. Oh, go ahead, Sanjay.
No, well, we have a climate track specifically, not specifically that like subgroup within climate, or if you would call that within climate. But we've done investments in tangential spaces.
Oh, great. And is it Eshmail? Am I saying that right?
Yeah, you got it right. Beautiful. Thank you. So first, thanks for hosting and the great info that you guys gave us. I'm a founder and I have a question for Sanjay. I was wondering if your funding is uncapped safe or you mentioned capped.
It's a cap safe.
Oh, okay. Thank you.
Mhm.
Cool. Um, all right, moving right along then. The question about co-founder and matchmaking. So if somebody is a co-founder, can they apply and then join and then get matched? Or should they try to find somebody before they apply? In that case, are there resources available to help them?
I mean, for us, whether you have a co-founder or not, before or after, it doesn't, we're not like example. I know YC is very like, hey, we want you to have a co-founder. We're fine with solo founders. I know one of our speakers speaks a lot to the fact that solo founders actually have more exits. And so whether you have one or not, you can, or if you're planning to get one, you can still join us before you find your co-founder. So
We would say it goes both ways. Sometimes we have solo founders, we have co-founders, we have people who are two solo founders and they meet each other and become co-founders. We've got a lot of networking events, different things like that. So I think we're kind of straddling both, or all the above, rather.
And just, I've spent some time on the Y Combinator co-founder matchmaking site, and I found some really cool people, and I wound up working on projects with them that way, even though I had no intention of applying to Y Combinator, with them. It was just like kind of a good place to find people. And there's some other like good, you just join the meetup group of whatever the topic is, or the Facebook group or something like that, and start messing around, or Reddit, or you can kind of like find people who are passionate about a similar thing if you like dig deep into the niche thread that you're exploring in your startup. Nice. I love seeing these hands. Veronica, did you want to go ahead and ask something?
Yeah, thank you. So I guess kind of along the lines of something you guys were talking about earlier, which is kind of like the funds go kind of where what's popular in the moment is, and I know a lot of it is like software and AI. Is there any room for like businesses and like medical device technology and things like that, and this type of like accelerator program? I know people in, VC funds and stuff like that are usually a little more hesitant because of regulatory requirements, et cetera, but just wanted to hear out what people have to say in the field.
For us, at least, we have a health and bio track, and we've done a couple in the device space. And then we also have a network of like if you're, for future rounds, we have a network of investors who specifically focus in that area. So, we have a pretty broad network and I'm sure all the groups here, they have a broad network of investors that some are pretty generalists and some are more like industry specific. So, yeah, there's still an appetite for those types of companies, depending on what the type of investor you're talking to.
Yeah.
I'd say the same. One of the verticals that we had was for health tech, and branch off of that was for medical devices. So we've got mentors, investors in that space. My background is also in healthcare, so pretty well versed in that. I would say, generally speaking, accelerators are tough depending on what your goal is. Like if your goal is right out of the accelerator to jump into starting to raise funding, that's one thing. If your goal is to how do you bulletproof your business so that the manufacturing works, supply chain works, that you've got a viable business, that you're able to grow, things like that, then that's another thing. So I think it would really depend on what do you want out of this accelerator, and why are you joining an accelerator?
Yeah, and then it might be like having to go non-VC routes. I know like we have someone from family office speaking to how do you find and network with family offices so you can, fundraise through them. Also just like angels and syndicates. So we talk about that. And so it might be tapping into other networks. And also if if your product is very consumer driven, like people would love this, crowdfunding might be a source as well to consider. And so understanding that, like, if you come to our cohort, we speak to all those things.
Yeah, I spent a little time helping StartX and was impressed with their wet labs. But they have this thing where if anybody kind of like meets their criteria for acceptance and that person is Stanford affiliated, they take them over any candidates that don't have that affiliation. So it's harder to get in if you're not Stanford. But they do have that wet lab, which I think is pretty cool. And there are a lot of resources that come with it. Startup legal services. Any of the programs have any of that in their mentorship, but maybe perhaps officially?
I do.
Yeah, I mean, we have a few legal, one speaking to IP, one speaking and then a few just other legal account lawyers. And I know some of them are offering like 20 minutes free consultation. So, and we also have them speak to topics throughout the cohort.
I'm the person who asked the question. Do you know if their services include access to Westlaw or LexisNexis? No idea? Okay.
Not that I know of, yeah.
Thanks.
Anyone else on legal stuff? I'll say for what it's worth that a lot of law firms are pretty generous with startups. If you reach out and have a specific question, you're like, hey, I'm a startup and I just need 15 minutes. This is my question. I need a yes or no answer, ideally with some elaboration and some citation. And they want to do that because they want to like get your business once you've grown, and if you have something specific and it's like really quick for them, they're often like eager to kind of do something like that. They might try to like get you into something where you owe them later once you make money, and that's a pretty common way to set things up. But a lot of good lawyers will go work as mentors in pre-accelerator programs, just to kind of like help out. And then they're like pretty cool and like chill about when and exactly how it converts into business for their firms. It's more about like building trust so that later on they're your preferred, counsel, as opposed to trying to like, collect a bunch of high fees from you before you can afford to pay them. At least that's been my experience.
Yeah, like a lot of them might have startup rates or packaging that, hey, as you grow or later on, that's when you pay them. And so they are pretty, because they understand startups quite early on are hard to use. And then some of them recommend, you know, some software that makes it easier for you to incorporate and things in that they know that the terms that they draft up are good, and they go over it with you so that you're optimizing for time as well.
We have a dedicated legal team, and so they hold office hours once a week, and it's free for the duration of the program.
Yeah, we also support the legal aspect. A lot of companies, maybe between of they haven't got the Delaware C Corp, or they already maybe have. But depending on the situation, we have the partnership with the specific support tool for anyone who want to do the incorporation in Delaware. And so you will get discounted or like more earlier fast access. And we also have a legal partnership. So for the first consultation, that will be free. Yeah.
Got it. I'm seeing something from Arissa already in response to the next question about post-program metrics. But, you know, you might want to elaborate there, but, you know, just sort of a question for everybody. Can you talk to some, like, what are the metrics that you're that you track? And then if you could, like, you know, share some recent results, that'd be great.
I mean, we're pretty early, so we don't have a ton of metrics to go from. But I will say, just from testimonials alone about, you know, the education, like we're a big part of us is education. I think like metrics around like fundraising is not necessarily always the right metric, because if you're not going VC fundraising route, then you're negating those people who actually decide, hey, actually, I can make my business revenue positive and like own my company fully, right? So I think for us, it's a lot about like sentiment and like, did they feel like this program was value for their time and money, and you know, and the network that they got out of it, and like the reviews and testimonials we got from our cohort were amazing. So on those metrics, I think we did a great job. Yeah.
Yeah, oh, go ahead, sorry.
So we've been running these accelerators like since 2012. So some alumni in early days, like some of them went unicorn, and then some of them successfully exit. So we will say one is the fundraising, and then we sometimes follow up in the investment for the alumni. We do have a specific fund only investing in the alumni cohort. Another thing is like if anyone is like trying to like if they are willing to refer this program to other founders, because we definitely see that good founders know good founders. So we really want to see like what is the satisfaction rate, and then like we will definitely follow up. And then we're also giving away a lot of benefit as long as you're part of this community. And then some people come back as a speaker, some people come back as investors. So it's like everything is circulated. So there's definitely, that is one of the aspect of what we do after the post program.
Yeah, and then for SkyDeck, the accelerator itself has been around for a long time, for like 15 years. So, you know, Lime Scooters has come out of it. The Databricks guys were originally in the original version of SkyDeck, but most of the data we have has been around, is more focused around since the fund has been around. So the fund has only been around for about 8 years. And to Natalie's point, like all the companies that we're looking for are looking for venture investing. So so venture investing is the metric we track. So 60% of our companies have raised an institutional seed round after the program is done. $2.5 billion raised. 80% of our companies are still active and running since the fund has been created about 8 years ago.
Nice. All right, so another question. We've talked about AI already and how it's like sort of integrated into the program, but somebody dove a little bit deeper about how VCs see it. Let's say that you're a startup and, you know, maybe you've used some AI here and there to sort of help you build your thing, but you're not necessarily an AI focused startup. If that's what VCs are so focused on right now, how do you, as the accelerator, help to kind of whet the appetite of the VCs or the angels or whoever to pay attention to these other startups?
I mean, I think these days in general, like if you're just, adding some functionality that use AI, like VCs don't want you to say you're an AI company, like unless you're like really building, the infrastructure, because everyone has AI now. And I'm not sure if I fully heard the question, but those are my thoughts. And then, we have a lot of feedback from VCs we have 3 pitch competitions throughout and our demo day. So you're getting to practice with like real investors. And so as you're practicing your pitch, if you're incorporating that, you'll get feedback around that as well.
Yeah, maybe it's a little bit similar what Natalie said. Yeah, everywhere it's AI, AI, AI. So as a default, it's almost like we're expecting you to already using some sort of AI. I mean, if you're not using AI, that's also fine as well. But I think more than caring about those noise, like how people think about you, I think it's more better to think about building and like having actual tractions and numbers, caring about what is the customer pain point, what you are trying to change. Like we really love the bold and unique idea, and that's what we are historically invested in really unique ideas. Like Elon Musk is one of our portfolio and like crazy dynamic people. So if you want to do something like, wow, like this is something so cool and then like very unique, we never really seen, it doesn't really matter like if you're using AI or not, just like come and talk why you want to do this. I think it's more better to thinking that, oh, is it like something that VC care? But each VC has a different philosophy. So you gotta find a good matching the philosophy and then like the VCs and investment thesis. Yeah.
Makes sense.
I would definitely second that. You definitely want to find VCs or investors that align with what you're doing and their thesis aligns with you and you align with them. With that said, I think I also wrote this in chat, is that at the end of the day, AI is just tech. It's just a vehicle to get somewhere. It's like the internet. It's like all the other pieces of tech. So if you have something that the customer or whoever your customer is just loves, they can't live without, they don't want to live without, it's something that they're really excited about, then I think you're on the right track. Why AI is coming into play is because AI will just get you there so much faster. And so I think that's really the question is how sticky is your product versus how quickly can you get it out to market and how quickly can you continue to iterate and grow it feature wise, product wise. Because if you're not leveraging AI with that, you're going to have a tough time keeping up. So I think those are kind of the two questions as opposed to VCs just being in love with AI for the sake of AI. Even though it might sound like that though, because I definitely do understand that.
Yeah, good points here. Let's see. All right, so some of these questions have been answered a little bit already. Here's one. For founders who are looking for a scaling opportunity, especially leveraging AI and other progressive technologies, where should they go to learn more about such opportunities to be inspired to take action on legitimate opportunities? So I guess, what's real and not in AI, or how do you leverage it in kind of the right way? We might have touched on that just a little bit right now. Does anyone have anything they want to add to that one?
I think like it sounds like you're trying to chase maybe what the trend is, and I would focus probably more on where your passion lies. Like if you're looking, yeah, I'm not sure if like I'm fully understanding the question, but I mean, if you're looking to be inspired, there's, if you haven't played with Cursor and you're not a coder, like I definitely think you're going to be inspired when you use that. But if you're looking for like an industry to start working in, I think you have to look at what you're passionate about, because whatever you work on, it's going to be a tough long journey. And if you're just chasing trends, that won't sustain you. You really have to like be attuned to like what it is you want to put out into the world and why you're doing it.
Yeah, I agree. And maybe I also misinterpreted the question. If the question was more like where can I find like cool AI tools to like use to like optimize and build my business, that's the way I interpreted it. But if that's the case, um, I actually, there's I actually use like those Discord channels and Reddit to hear what my friends and other founders are using, and that's where I get a lot of my insights on what tools to use. So I would just recommend talking to friends and talking to other builders in the space and see what tools they have found useful.
And if that's the case, then hackathons are a
Oh
great
yeah,
way.
yeah.
For sure.
When I was doing my startup, I would just go to hackathons and like build out a small piece of my business each time, like use an idea, and that was a great way to network, learn new tooling, see what's out there, and so that's and then if you win a prize, that's always great motivation as well.
Yeah, absolutely. So I'm just gonna go really low. When I was first starting out, I honestly I just went to LinkedIn. There are so many people with so many posts about how they're doing these types of prompts and they're using this type of AI tools and this, and just piecing together what's been working for other people, and then trying to figure out how do I need to use AI? How do I want to use AI? I think that's a really good starting place because I didn't know what I didn't know. And so I just basically used what other people were posting to get a general idea of what were the capabilities out there, first of all, and then piecing together the different tools. Then there's also lists on what are the best, like the top AI tools for any given industry, for any given purpose. And so then I went to look at those to see how I could Frankenstein some things together. And then I asked ChatGPT. It's like, ChatGPT, I need to accomplish this, and I think these tools are the best tools. Tell me what I can use, shouldn't use, etc. And then I went from there. It's pretty much how I learned how to vibe code too. So it's my ghetto way of learning.
Awesome. Yeah. Um, let's see. There's a question here about. Oh, hang on. We're almost at time, aren't we?
Oh yeah. Oh my goodness.
All
Went by
right.
so fast.
Let's see if we can't blow through a couple more. I have two left anyway, and maybe we can just whoever wants to speak on the panels can do so, just so that we don't have to circulate through all four. Has anyone noticed startups focusing on creating opportunities that help companies strengthen their local manufacturing given the new administration? I have, so maybe I can talk to that one. Yeah, I think that's a trend a lot of startups are trying to capitalize on, and there are a lot of startups that have already been doing that sort of thing that are now kind of seeing more limelight than they would have otherwise. But that's a cool area. Yeah. Another one, can you explain what would a clean cap table look like? What are the steps to create a cap table? Do you need legal help for it? Anyone want to take that one?
I'm sorry, what was the question, Kevin?
The
Clean cap tables. I mean, I think if you're negotiating any of your terms, you'll always want a lawyer to look at it, especially at the early stages, because if you make a mistake there, it's going to cost you way down the line. I know sometimes the term sheets, in the way that like how an exit happens, if you don't consider like your control of that, companies have been like forced to have a sale when they were still revenue positive because their investors wanted them to cash out. So I would definitely always have a lawyer. I know it seems like lawyers are expensive, but that's the time you need them. So yeah.
100%. I can't tell you how many times I've seen founders have to spend a lot more money later down the line because something is off with their cap table, or More importantly, if they're trying to raise money, investors will say no at messy cap tables, so they miss out on some good opportunities. I think generally speaking, a clean cap table is with the least amount of people on there, or the least amount of people that own portions of your business is the cleanest cap table you can have.
Yeah. So does that mean like imposing a minimum check size is important? Do you guys encourage that in your accelerators?
We don't impose any, but we talk about SPVs, and then also I think just in general, the thing I've always heard is like don't have like all these special nuances. Like they want it to be clean, they want to be standardized when you're starting to introduce all these additional terms or if cases, that's when it starts not being a clean cap table, and then it makes it like more and more unattractive for future investors, and that's when things get complicated.
And just to remember, whenever you're starting your deals now or negotiations or the term sheets now, what you do now affects every other round after you and the types of negotiations people want and are going to look for. So it's especially for pre-seed, it's a compounding effect and something to be mindful of, which is why having lawyers, or at the very least, having people who have gone through this process, who know this process, to help you better understand what does dilution look like after round 1, round 2, round 3, round 4. And then also, what are the different terms? So if like your lead has a certain term, but your other your follow-ons have terms and stuff, like what does that look like? What should that look like? And then what outliers are not ideal, but you can get away with, etc.
I know we're pretty much at time, so I was thinking maybe if all of us panel, if we had anything else that we want to share. My main thing is that like we are actively accepting applications right now. Our cohort starts August 23rd till August 26th. I know Jeni's actually starts end of October, so hey, if you want, you can do mine and then do Jeni's. We provide different information. And would love to have you apply. And if you want to connect, want to ask more questions, I've just shared my LinkedIn as well.
Yeah, for SkyDeck, yeah, our application is also open. I shared the application earlier, but I'll reshare it and also put my LinkedIn in case people would like to connect or have questions.
Yeah, same as Natalie mentioned, my cohort starts at the end of October. In the meantime, from now until then, we'll have a handful of different types of events. One of them, we're doing a series where it's showing people what are the best tools, AI tools to use. So, for example, prototyping your MVP, or what's a really good way to do inbound sales, passive sales, etc. The other thing is Natalie and I will actually be doing a pitch deck event coming up in a couple of weeks where we'll be ripping apart your pitch decks and helping you rebuild them if that's something that you're interested in. I'll also re-put my information.
Arissa or anyone from Stanford want to share anything else?
Well, we hope you enjoyed this event. Subscribe on Luma. We do a lot of this kind of stuff. And if you have any additional questions, maybe, let's see, here's a good place to put them. Let's do, yeah, I just put in the chat, Stanford Angels TXs for Texas at gmail.com. Yeah, if you have any additional questions that you didn't get a chance to ask, I'll try to get those over to the panelists. Excellent. Thanks, everybody.
Thank you, everyone. And feel free to reach out. I'm sure we're all really willing to answer your questions. Send us your decks, all that good stuff.
Thanks much. Hope you all have a great day.
Yeah, you too.
Thank you everyone for joining.
Thank you all.